Netflix just had a horrific earnings report. Analysts were expecting 2.7 million new subscribers, and instead they had a loss of 200,000 subscribers. And not only that, they're expecting there to be upwards of 2 million subscribers lost in the second quarter. Now they're going to blame it on password sharing, like not everybody's been doing that since the beginning of time. They're blaming it on Russia. They're blaming it on increased competition. Yeah, when you keep hiking your prices, you're giving people more reason to go to subscription services like Hulu and Disney Plus and HBO Max, which is by far way better than Netflix anyways. But you literally had Wall Street get their heads handed to them. This is like Buster Douglas knocking out Mike Tyson. It was a huge loss for the house. And now this stock is down 68% off of its highs from back in November of 2021. It was once trading at $700.99, its all-time highs. Today, it finds itself trading at $226 per share. And if you don't think stop losses work, look at Netflix. Guys, if you don't have a stop loss on Netflix, you got destroyed. If you did use a stop loss, you were able to miss out on a lot of losses. Second point I would like to make is don't trade through earnings. Well, it can never happen to Facebook. Oh, it can never happen to Netflix. Guess what? It happened to both of them. And if you held through these earnings reports of some of these big FANG companies, you got crushed. But then there are some of you guys like, well, did you see how much money I just made off of my Tesla earnings call today? It's up 5%. Yeah, but if you did that with Tesla and earnings, you're taking a huge loss still. But it shouldn't come as any surprise that they're struggling. Guys, they gave $100 million to Harry and Meghan, whoever the heck they are. They gave $65 million to Obama to do national parks documentaries. Guys, he only got paid $3.2 million for being the leader of the free world. So clearly somebody doesn't understand the value of a dollar and they're just throwing money out like they're the Joker at the Gotham Parade from the Michael Keaton's Batman film in 1989. The best Batman film, by the way. But what Netflix needs to realize is that all their subscribers really want is more Cobra Kai, Stranger Things, Tiger King, and basic white girl murder mysteries to solve. Not $100 million for freaking Harry Merkel. Well, Bill Ackman and some of the other Wall Street guys, they're throwing in the towel and saying, hey, I'm moving on from this Netflix trade. Let's look at Netflix for ourselves and see if there's any opportunities, whether now might be a time to buy or wait for better pricing to come. Guys, this thing is an absolute dumpster fire, okay? I've been looking at different support levels for quite some time, and it's just blowing through every support level. So it's very difficult to trust a support level or a trend line right now in this stock. For instance, I was watching this particular trend line for a long time thinking, okay, maybe we bounce off of this one. But guess what? If you held it through earnings, you found out that it did not bounce off of this rising trend line here. Instead, it gapped right through it and kept on moving. Again, a reason why you don't hold through earnings. And let's not forget, the only thing that it's respecting right now is this nasty declining trend line off of its all-time highs. You go all the way back to November, and this thing has been following this rising trend line perfectly, and it is yet to break. If you want to get bullish on this stock again, first off, it needs to show that it can break this declining trend line off of its all-time highs. Until that happens, it's a no-go for this stock. Finally, let's go down memory lane, look at the weekly chart. This is Netflix going all the way back to 2015. This is a 7-year trend line, and I have my doubts about whether or not it can hold. And then you also have this trend line going back to the Q4 lows from 2018 when the market had a severe correction. You have a notable trend line here that also needs to hold, which is pretty much right in line with that rising trend line going all the way back to 2015. How it ends this week, can it get a little bit of a bounce just to save face and hold these two trend lines? Maybe, just maybe, you have an opportunity for a bouncer, but do not trust this stock whatsoever. You have to go into it with a stop loss, and if it breaks it, I'd be getting out, no questions asked, because this stock is the worst stock in the S&P 500 for 2022. You do not trust this stock whatsoever. It has shown time and time again, it is a very bad stock. There's only a little bit of a silver lining here if it can hold the two support levels that I talked about by week's end. So my two takeaways, don't trade a stock through earnings. It's just not worth it. Investing and trading is different. Trading, on the other hand, I don't believe if you're holding a stock for a few weeks to a couple months that that's a stock that you want to also hold through an earnings report. The second, use stop losses. Guys, for anybody who got in at like 650, 670, 680, yes, you got in near the top. Is there any shame in that? No. Where the shame exists is when you don't get out of the stock when it's clearly going against you. And for many people, they're holding at significantly higher levels, hoping that this thing's going to bounce back. And now their capital is tied up, and had they just used a stop loss, they could have been out of the stock and onto something new, maybe something even profitable. And if you enjoyed this video, make sure to like and subscribe, please. Make sure to like and subscribe because it does help me continue to build my audience. And click the join button down below to get my market research each and every day. That's going to include my watch lists, my trade setups that I'm following each and every day, plus the most intriguing charts, FANG setups, indices, and individual stocks that I come across. So check it out. Support this channel. Thank you guys, and God bless.